Hey everyone, just a quick sound check. Welcome back to another inflation numbers. Very interesting one tonight. Okay, just a quick sound check and we can get started. Hope everyone is ready. Platform's up, open, everything is up and running. We'll go through a few theory and then we'll do the live trade. We'll try and spend a little bit more time tonight. Let's try and take a look at a few more pairs to look at. But yeah, as per usual, pretty standard operation. We're going to be using our stop orders, and let's get this started. So this is news trading number 3, inflation. My name is Vida in general. Let's get this started with a quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice. All right. So obviously you're going to get your bonuses for participating as per usual every month. All right. You got your promo code to double your deposit bonus. Also access to a private Telegram channel if you've registered through the website and you registered your email. All right, let's take a quick look on the content for tonight, what inflation is, what's the CPI, what's core inflation, and obviously we're going to spend half of this session trading the CPI live as per usual. All right, so what inflation is? Inflation is a rate at which prices for goods and services rise. The most commonly used inflation indices are the consumer price index, which also part of it is going to be the core inflation as well, or the core CPI. The consumer price index is a critical indicator of pricing pressures in an economy, provides you with a gauge of inflation. Forex traders basically monitors the CPI as it can lead to changes in the monetary policy by central bank that will either strengthen or weaken the currency against the rivals in the market. Let me explain a little bit in terms of what it is for tonight. So the context of how we look at the CPI and how is it going to affect the decision that the FOMC is going to create, or the ECB, or the Bank of England. For this one here, it's going to be the US CPI, so we are going to be focusing on what the FOMC is going to be doing. So let me explain a little bit about the context in terms of how this is going to impact what the FOMC is going to do. The FOMC is currently scheduled for one more interest rate hike for 2023, right? And there's that expectation, at least from my side. I'm expecting the September meeting to be a live meeting where the interest rate is going to get hiked, okay? But the market consensus right now is for the FOMC to kind of pause a little bit, right? But with the inflation, I think for the first time, no, it's not the first time. It's been a few months that we've seen this happen. But since July 2022, we basically have seen inflation drop, and we are expecting inflation to pick up for the month of July, right? So the data we're looking at today is actually last month's inflation number, okay? And next month's inflation number is actually going to be this month's inflation number. Okay, so the expected rise is from 3% to 3.3%. So if that's going to be the case, then the FOMC will likely continue hiking rates. And if that's going to be the case, then it's actually going to make the US dollar stronger. If it falls below inflation, the expectation, then we expect the FOMC to not do anything, and that's going to probably cause the US dollar to dip down. Okay, so that's just a little bit of an insight. We'll get back to this later on. But let me explain the difference between the two data that we're going to be looking at, CPI and the PPI tomorrow, right? We have CPI today, tomorrow is PPI. So CPI measures the cost of living. It includes broad range of goods, services purchased by consumer, includes international personal consumption items. Scope excludes change in interest rates or costs. Okay, that's consumer side. Okay, that's the CPI. So CPI is basically what affects us as a consumer, right? PPI is what affects the producer side. So PPI measures the real growth in output. Includes items produced for personal consumption, does not include imports but include exports, right? Encompasses services with prices including an interest rate component. So the difference is that with the PPI, interest rate is tacked onto that. The CPI, interest rate is not part of it. Okay, so what is the core inflation? The core inflation refers to the change in prices of goods and services, excluding those from the food and energy sectors. These items are excluded from this measure of inflation because their prices are more volatile. Typically, core inflation is determined using the consumer price index. It is part of the core CPI is part of CPI, right? So core CPI, to explain, it's basically just CPI, the headline CPI, excluding some certain foods. I think it's fresh foods and energies like oils. Okay, so let's go through the history of what has happened in the past. I have a few examples on the CPI numbers that we've been doing since May. So we've got the May number, May 10th. We have the CPI at 4.9%. Previously at 5%, the consensus was at 5%. So people are expecting no changes to the inflation. But inflation dipped down, and you can see the initial reaction in the market is that the Euro USD shot up, right? But it only lasts for 30 minutes. And then you can see how it reverses for the next few days. It basically reversed down for the Euro USD because if we take a look at this inflation, it wasn't that big of a miss, right? It's 5% to 4.9%. It's just 0.1% below the consensus. And back then, the FOMC is still, we know the FOMC is still going to be hiking interest rates, so it doesn't have that much of an impact, even though it came in a little bit lower. So this is going to be a little bit unique. That's why we need to take a look at inflation on a monthly basis and not just consider an inflation just as a news, but we need to understand the context on how it's actually going to affect the FOMC's interest rate decision. Okay, so that's May, right? So we see the initial spike to the upside. Now, this is on a 50-minute chart. Basically, we only have like 45 minutes and then the market reverses on itself. So you need to be a little bit more careful when you are trading the news tonight. We want to do it in a very quick manner, right? We want to get in, we want to get out, okay? Because how we do that news trading, just like the NFP, we're going to stay in the trade. That would depend on the much bigger picture. Obviously, we need to go up on the hourly time frame and kind of decide what the trend is. Is it in line with the trend and stuff like that? But yeah, just to keep in mind, if you're going to be part of this session tonight, we are going to trade. We want to open our position. And ideally, within the first 50 minutes, we want to close out. We want to get out. And that's the whole point, okay? If we overstate, if we stayed more than 50 minutes, then we need to kind of zoom out a little bit while we're waiting for price to move, I guess. And then decide, whether or not we want to keep that trade or should we let go of that position and stuff like that. Okay, but on the context for tonight's trading, it's going to be an in and out scenario for us. Okay, it's not going to be like, hey, I'm going to open the position. It's going to last for, a few days, a few weeks. No, it doesn't work in that context. I'm not scalping the market either. Okay, but at the same time, I don't want to be doing this as a swing trade. I really want this to be an intraday trade. If we can get out within the first 50 minutes, we want to be out in the first 50 minutes and secure our profits. Okay. All right. So that's May. This is June. Okay, and you can see the CPI there dropped down from 4.9% to 4%. It's still below the consensus of 4.1%, but the drop was significant. It was 0.9% drop. And you can see the spike that happened here. Within the first 50 minutes, a breakout to one side, and then it reverses, and it doesn't change its direction until the next day. So you need to be very careful with the whole scenario here, that whatever happens, we just want to be in there. We want to get in, we want to get out as soon as we can, okay? Because the time window fluctuates. Sometimes we have 45 minutes, sometimes we don't have 45 minutes, sometimes we only have that 15 minutes window to decide whether we want to overstay or not. Because if we stayed in that long trade on the Euro USD, doesn't matter what it is. If you open a short position, you're going to get stopped out. If you stay in the long position, you're going to get stopped out either way, okay? So news trading, it's very different from fundamental analysis. So just keep that in mind. We already explained that on Monday's session. So hopefully you guys are all in one page here. Okay. So let's go through the calendar. This is the inflation rate year on year. And I want to give you a little bit of an illustration of what's been going on. This is July. You can see that it was at 8.5%. And then you can see it gradually goes down, right? So not once since July 2022 that we have seen the inflation picked up, okay? there were a couple of consensus where inflation was kind of predicted to pick up, but we keep seeing a drop. The reason why tonight it's unique because it's at 3%. Now, the reason why 3% is important because the general target range for the interest rate from a central bank is actually between 2% to 3%. I know everyone else is looking at 2% as a target right now, but 3% is still a significant achievement from 8.5% within a period of 1 year. So yes, July to July, basically we have 1 year's worth of data. We have seen a significant drop. We've seen the inflation drop down by 5.5%. So whatever the FOMC is doing has an impact. The drop in energy prices also has an impact in the drop of inflation as well. Now, the reason why this is unique is at 3%. And I think for the first time in maybe about 4 or 5 months, the inflation is expected to pick up. And that pickup was from 3%. To 3.3%. Okay, it might ranges between 3.1% to 3.3%, but we're looking at an increase from 3% to 3.3%. That's the expectation. The core inflation, this one here fluctuates a little bit. I actually brought this up in the weekly outlook. In the weekly outlook, you might have actually seen a different consensus. It was actually 4.7%, but the consensus has gone up. Now the core inflation is expected to stay at 4.8%. Changes in inflation month to month remains at 0.2%. Changes in core inflation month to month remains at 0.2%. So we want to focus on the headline inflation as well as the core inflation, because you're not looking at just one data for the inflation numbers. You're actually looking at 4 sets of data. Number one, let me explain. The first and most important one is the headline inflation. This is the year-on-year CPI. Depending on your calendar, on the trading economics, it's called inflation rate. But if you go to Forex Factory and everything else, it's called year-on-year CPI. Okay? This is what we call the headline inflation. This is going to be our focus because everyone is going to be looking at this. And if this one meets consensus, I've got a couple of scenarios, but if this one meets consensus, it's actually going to cause a little bit of a problem because the market has actually been attempting to price in this potential increase in inflation. Okay, if it drops below 3% or it comes out at 3%, unchanged at 3%, I think it's probably a little bit more on the negative for the US dollar. If it comes in, let's say 2.8% or 2.9%, that's going to be a real negative for the US dollar. If the inflation comes in a lot higher than what the consensus is, let's say 3.5%, that's going to be a straight boost for the US dollar. So we're going to see the Euro USD collapse. The dollar yen's just going to rally up if that's going to be the case. Now, once everyone traded these inflation numbers, they're going to be looking at the core inflation number. Okay, the core inflation is the underlying inflation. And when we talk about central banks meeting a inflation target, it typically refers to the core inflation. So don't think that the inflation has dropped to 3% and then the FOMC needs to stop hiking rates. They still look at 4.8% and that is still far from 2%. Okay, so this is why I keep saying the September event is probably going to be a live interest rate hike from the FOMC. But yeah, what happens is with inflation numbers, when you trade it, the reason why it causes a little bit of it's not a little bit, it's kind of a huge whipsaw, is that sometimes we get the headline inflation that comes out with a significantly different number from the core inflation. It causes a little bit of confusion. So for example, let's say inflation rate comes out at 3.3%. But the core inflation rate, let's say it dropped down to 4.7% or 4.6%. That's going to be a negative surprise for the data. Okay? If the inflation comes out at 3.3%, but the core inflation goes up to 5%, that's going to be a positive for the US as well. So the core inflation does affect how we look at it. So we're not looking at just one set of data. We're actually looking at 4 sets of data, but we want to focus on the year-on-year numbers, not the monthly numbers. Once we clear off the year-on-year numbers, then that's where we look at the monthly numbers. All right? Any questions so far in terms of how we read the inflation number? All right. So right now we have more than 100 people watching this, but I only see 31 likes. So if you're here and you're attending this and you're getting pumped up, for that trade, click on the like button. So I really want to say at least 100 here. But yeah, if you can do that, it's gonna make my day. All right. Okay, let's just jump on to the technicals. The way we want to do this is we want to create stop orders. Okay, so I'm actually going to go to the platform first, just to refresh your memory in terms of how you can create the stop orders. Hopefully, you guys know how to create the stop orders, right? This one here, the number is going to be small, but I'm going to switch to TradingView later on. But in 5 minutes before the release, we'll go back to the MT4 and lay out our levels. But let me zoom out just to give you an illustration. For now, on the Euro USD, I'm actually going to go onto the hourly time frame. The reason why I want to go into the hourly time frame, this one here will most certainly hit both sides if the range is too small. So we want to have this at a much bigger range. Now, if you take a look at the movement for today on the Euro USD, it has actually rallied up significantly, right? If you take a look at it, it's about 60-70 pips. That's basically today's run. So logically, if you want to place your stop orders, sure, we can we use this one? I would use the one up here because I want to give it a little bit more room. So I actually want to have it just above 4th of August was Friday's high. Okay, just slightly above Friday's high. Now, if you want to create that other order for this one, you can have it slightly lower. Okay, just around below 1.10. I would actually give it a little bit more room. I would say about 1.1090 or 85. Okay, I want to have a little bit more room because I'm not afraid in terms of the inflation number. Is it going to reach the orders or not? Really depends. 5 minutes of the trade will probably place the order, but right now I'm just going to cancel the order first. I want to run down a few things. Okay, all right. Let's take a look at the not dollar Japanese. And you know what? I'll give you guys gold first because this one here I might not be able to just jump on quickly on gold, but let me illustrate the range for gold for you guys. This is gold, and you can take a look at the range for gold here. For today, it has actually run up significantly. It is about $7.90. All right, that's 790 pips for gold there. But yeah, it has run up 790 at this point in time. Now, if you were to consider where do you want to place your stop orders, this one here is going to be a bit tough, okay? Because logically, if you want to have your stop orders, you really want to have it down there at about 1913, or you want to have it a little bit higher, maybe about. That's the problem because we can't highlight 1925, and 1925 doesn't bring any significance at this point in time. So if you really want to highlight it, it's going to be about 1927. That's from the hourly perspective. This is the safe range, okay? But this safe range, I know it's not small. It's actually pretty huge. It's $15, and you're not going to be able to get in and out with that $15. So we need to go into a small time frame. The problem with the small time frame is that you can clearly tell there's no way that you can have a buy order anywhere below 1927 because we just don't have anywhere to latch on to create that range because right now this is just zooming up, right? So you can create one stop order if you want, a sell stop order, but the buy stop order will still be at 1927, and this is where I'm a little bit hesitant in terms of trading gold tonight. But again, I'm not going to stop you gold traders. You're likely going to be trading this, but let's try to come back here in the next 5 minutes and see if we can find a suitable range for gold. All right, we'll come back to gold, but let's go on to Euro USD. For the Euro USD, if you take a look at this one here, I've placed it a little bit higher. Okay, this might seem huge, but is actually only about 20 pips in terms of range. So this one here makes sense a little bit in terms of Euro USD. So for Euro USD, you can have it at 1.1005 if you want to, right? if you want it to be, it doesn't matter. If you want to have it, you can have it at 1.105. In terms of the buy stop, you might want to have it a little bit higher. I actually want to have it a little bit higher at 1.1040. Okay, just in case, because if I adjust it to 1.1040 and take a look at where price is right now and towards 1.1040, it's only about 30 pips off range, so I'm not missing out too much. So I'm gonna place that order right now for the Euro USD. I'm gonna have about 1.1050 and then at 1.1040. Okay, so let's do that. Let's delete this, and I want to have it, I want to buy stop at 1.1040, and I want to sell stop just about 1.10. Yeah, I'll go a little bit lower. It's fine. I'll go at 1.10. Okay, so this is the established range for the Euro USD. Yeah. Okay. Let me adjust this. And by the way, if your order is triggered, all right, let's say your buy stop is triggered, you need to cancel out the other orders. Okay, that's how we do the straddle strategy. You don't want to have two orders open, otherwise if it gets both of your orders, it's going to get hedged, and it's just a headache, like what we saw on Friday's NFP numbers. Okay, so Euro USD is done. We have a buy stop order at 1.1040 and a sell stop at 1.10. Okay, so about 40 pips of room for the Euro USD. Next up is the Pound USD. Okay, Pound USD also, if you take a look at this one, you have a couple of options. Let's measure the range first for Pound USD. Again, the maximum range is only about 32.5. So, you have a few options. If you want to get it in early, you can have it at 1.2754. But I don't mind waiting a little bit, so I'm actually going to choose 1.2743 for my sell stop. Okay, the buy stop is going to be at 1.2775. Maybe a little bit higher at 1.2780. Okay, so you're gonna have your buy stop at 1.2780, and you have your sell stop at 1.2745 or 1.2743. Okay, so let's place that order for the Pound USD. 1.2780. Here we go, and just something. Oh, the Pound USD is too close. All right, see, the Pound USD numbers is actually too close. I'm actually gonna have this a little bit higher. Okay, so I'm not too worried. I'm just gonna adjust this a little bit higher, just slightly off that high there for Pound USD. Okay, so you got 1.2785 and 1.2740 for the Pound USD. Okay, we got 7 more minutes. Don't worry. Any requests for any of the majors that we're gonna take a look at, we'll do that. Now, dollar Japanese yen might have a minimal impact on the market from the CPI numbers. Okay, but we'll see. Would it have an impact? It should, but it shouldn't be a prolonged impact. But for the dollar yen, I think for the resistance we have 143.89. That's going to be a buy stop. Your sell stop is going to be a little bit lower, maybe about 143.60 or 143.55. Need to give this a little bit more room. Okay, so I want 143.89 and 143.55 for the dollar Japanese yen. 143.89. Yeah, just there. And 143, a little bit lower. Yeah, about 143.55. Okay, so those are going to be your stop orders. Again, the dollar Japanese yen is going to be at 143.89 or 143.90. Sell stop is going to be at 143.55. Okay, that's done. Now let's take a look at, according to the previous data, can we fade CPI? We'll try, but we'll see. Okay, buy or sell later. Look, this is news, trading the news. We'll just take whatever it is and we'll try to get out as soon as we can. Okay, hopefully it doesn't whip both sides, but yeah, we'll see what happens. Okay, That's done. We've got Euro USD, we've got Pound USD, we've got the Dollar Japanese Yen. Any other requests for anything that we want to take a look at? I can't have too many, otherwise I can't control it. Okay, but we can do a lot more. You know, obviously. Can we do Euro Yen and Sterling Yen? Probably not. I would leave this one alone. I'm not too concerned about this. You might be able to do New Zealand USD if you want to, and Aussie USD, okay? Actually, no. New Zealand USD, you can't actually do New Zealand USD. Aussie USD, you also can't do New Zealand Aussie USD because we don't have an established range for the Aussie USD. You can see with the movement here for the Aussie USD, it's just been climbing up, right? So it doesn't go sideways. And, you know, in a situation like this, it's very hard for us to do a buy stop and a sell stop order in a condition like that. So we'll try to not take anything that's been rallying up without a stop. You guys are, you know, jokers, right? Okay. Yeah, we'll go back to gold. Let's go back to gold right now because we don't have a lot of time and we need to go back to gold. Okay. All right, we might have a little bit of an established range for gold. So okay, you might want to use this high for gold. That's going to be 1923 and 1920. Okay, see, I'm afraid this is going to get triggered before we actually open up. So I'll actually go a little bit higher, about 1924.50. Okay, let's do gold very, very quickly because we need to be quick. We don't have a lot of time. 1920. A little bit lower is fine. You want to go 1919, it's okay. 1920 is also okay. I'll be going about 1920. To the upside, let's see if we can do this on the 50-minute time frame. That's going to be enough room. All right, about 1924. All right, you've got 1920 and 1924. I'm just really, you know, I think this is a very small range for gold. It's okay to have it a little bit wider. Okay, I just think this is a little bit too small for gold. All right, we've got Euro USD. Let me just repeat the orders again. Euro USD, we have a buy stop at 1.1040. 1.1040. We have a sell stop at 1.10. Okay. Pound USD, we have a buy stop at 1.2785. We have a sell stop for Pound USD at 1.2742. We have a buy stop for Dollar Yen at 143.90. We have a sell stop for the Japanese Yen at 143.55. Sell stop for gold at 1920. Buy stop for gold at 1924. A little bit concerned with gold, all right? But, you know, at your own risk, I'm a little bit concerned with how gold is moving right now. All right, 2 minutes to go. Any questions so far? Any last minute requests? Otherwise, we're going to be on standby for that news to be released. Let me just get my tea. Make sure you guys know what you're doing, right? And once the order has been established, you need to cancel the other order immediately, and then we need to start doing our stop losses, okay? And take profit targets as well. Okay, if we can close it manually, get out manually, that's completely fine. Take profit for gold, we cannot decide that for now, but if it does break to the upside, then we're probably looking at about 1929, 1930 as potential take profit to the upside. To the downside, we're probably going to be looking at about 1915, 1913. I'm not too keen on gold, I'll be honest with you, not too keen on gold. If your USD inflation rate rises, does it mean that there's a buying opportunity? If inflation goes up, it's going to be a sell for the Euro USD because the USD will likely gain if the inflation goes up above consensus. Okay? All right, any minute? So let me split this up so I can monitor it as well. No one's sending likes, so I don't know. All right, any minute. looks like we should have something. All right. So we got buy, sell, buy. Everything is there. Euro USD hasn't been triggered. I need to close my pound USD. I need to close my dollar Japanese yen. I need to close my gold. And we are off. I need to close my euro, and we're running. That's it. Pretty much. So you can see it's going in one direction, and you guys need to be quick. Let me read through the inflation number as it is. While you monitor the trade, feel free to get out if you need to. Inflation rate is up 3.2%, but it is below the consensus of 3.3%. And as I said, the core inflation might have dropped down to 4.7%. It does drop down to 4.7%. So we have a little bit of conflicting number. It's not a strong inflation number from the US, even though it picked up a little bit. The headline inflation goes up from 3 to 3.2%. The headline, the core inflation, however, dropped down from 4.8% to 4.7%. It's actually nothing significant. So, yeah. So we are running right now for the trade. Everything is good. You should be getting out of this trade, and we are out. That's it. Done. 2 minutes, right? If you guys want to stay in, I'll guide you guys, but you know, the one that we did just now, we are basically out. You got nothing. That's it. That was pretty quick, but yeah. We're done. Okay, so I'll go through. The trade is done, right? The trade is done. We're already out. We've secured enough profits, and then we are out. If you guys still running, I would move your stop loss to break even. So let me just go on to this. So we have that buy stop over there, right? So this is basically what we did, right? You want to have your stop loss at break even right now. You can lock it also at 1925 if you want to. Okay, in terms of target level, this is already beyond target level because our target level is 1930. Don't overstay. If you need to get out, especially you gold traders, this is good. That's enough. That's 500 and that's close to 600 pips for you guys. That's $5-6. That's enough. All right. If you guys want to get in, you want to get out, we are done for gold. If you want to continue, move your stop loss to break even if you need to, but I would just be out. That was pretty easy trade, no brainer. Right, the Euro USD, same thing. We basically have this. All right, and in terms of target level, you're probably going to be looking at 1.1075. So that's why I get out from the trade, and you can see this is starting to fade back a little bit. So if you want to stay, you don't want to get out, you really want to stay, you're convinced this is going to go up, set your stop losses correctly or move it to break even, and then don't be too troubled because we're out. And that's niche trading, guys. We're done. Pretty simple. I'm just kidding. Let's take a look at Euro USD. What can we do for Euro USD here in terms of the placement? We'll monitor that for pound USD as well. We also broke to the upside for the pound USD. Obviously, this is going to be a trade. All right. And you need to be getting out of your position if you need to. Don't overstay because right now we're actually kind of struggling about 1.28. We still have that resistance at 1.2825. Okay. You want to stay, make sure you have your stop losses. The minimum stop loss for this one is going to be about 1.2755, okay, or about 1.2760. Its choice is yours, or you can have it a little bit lower at 1.2750 or towards the lower end of the range just now at 1.2743. If you are not too sure about anything in terms of stop loss placement and whatnot, move your stop loss to break even, let it run if you want to. But you know, I'll be honest with you, the way we trade news trading is that okay, we saw that spike, we want to get out as soon as we can, and you guys saw how easily we basically just managed to get out. I had time to close out my stop orders and still walk away. All right, pretty much had a pick. The Japanese yen, same thing. You see the spike that happened there, so that's why I actually closed that trade. And if I have to do it in the first 5 minutes, the first 1 minute, I did it right. The whole trade takes us less than 1 minute. You know, it's spike, trade the spike, we get out, and that's done. Right now, this is potentially attempting to fade itself. Now, the way we look at the CPI number and how we fade it might be a little bit different. Okay. So let's take a look at dollar Japanese yen as an example. I might want to fade this one. So this one here, we actually had a little bit of an afternoon session today. We did attempted a short on the dollar Japanese yen. Hopefully you guys that joined in the afternoon managed to get out from that trade for the dollar Japanese yen. All right, which is not too bad. Now, if we take a look at the numbers, the inflation number picked up. No matter what, even though it's below consensus at 3.3%, it is still at 3.2%, right? It's still higher than 3%. The core inflation dipped down, but it's only 0.1% dip. Okay, the headline inflation does picked up. Okay, we also have the initial jobless claims. Initial jobless claims was at 248,000. Slightly bad, but jobless claims 4 weeks average was also slightly below consensus. Consensus was 231,000. I'll just bring it back here. But anyway, we have other data than CPI numbers because we have the weekly jobless claims number. We have the 4-week jobless claims average as well. Okay, so those are still going to have an impact into this. Okay, so overall, it's not as strong as what the market is expecting, but I think we're still looking at a persistent inflation coming out in the US. Okay, so what we could potentially look at for the dollar Japanese yen, for example, you can see. Look, if you guys overstayed in the trade, I think it would be a negative for you guys right now. I don't know, but we'll see. But yeah, I hope not. Okay, let's take a look for the dollar Japanese yen, for example. For dollar Japanese yen, if we measure the correction that it has done today, it has actually done 61.8%. So we can actually reverse this, and we're waiting for the confirmation on the hourly time frame, at least for the dollar Japanese yen. Once it manages to maintain a position close up or above 143.50, we're likely going to go long the dollar Japanese yen. Okay, so let's monitor the pound USD. If you take a look at the pound USD, it's finding that very hard to break above 1.28. So if we saw that as a resistance at 1.28, if the hourly closes below 1.28, I would actually prefer to go short pound USD if it closes below 1.28 in the next 20 minutes, and then I would target 1.2750. Okay, potentially even lower for pound USD. Just look at this scenario. If that happens, the risk reward ratio is actually about 124 on pound USD if it doesn't go above 1.28. But not now. I'm not going short now. Okay, not now. We need an hourly close below 1.28. If the hourly close is below 1.28, then yeah, we are looking to go short. We are looking for the trade today. As a reminder, we are done for today. We've got buy Euro USD, we've got buy Pound USD, we've got sell dollar yen, we've got buy gold, and that's all done today. Okay, that's all done. Our trade for the CPI is done. I'm assessing the aftermath of that inflation number, what is likely going to happen. Now, if you're seeing the reversal in the market right now, the fade that's going on in the market, because market, no matter what, even though it's below consensus, inflation, headline inflation still go up from 3% to 3.2%. As I mentioned, this is important because for one whole year, we have seen inflation drop. This is the first time the inflation has actually picked up again. It's come back up from 3% to 3.2%. Okay. All right, that's pound USD, that's Euro USD. We've got dollar yen sorted out. Let's take a look at the infamous gold. What's going to happen with gold? That was obviously 1930. I said 1930, you need to get out at 1930. Do you guys that went long just now and didn't get out in 1930? I don't know what's going to happen because the reason why we look at 1930, okay? All right, you need to get out. If you don't get out, you're still in profit. All right, if you don't get out, it's likely going to drain you. 1930 was the area where it was previous support turned into resistance at about 1930. It's a psychological price level. It is also where the Ichimoku cloud is located. If it fails at 1930, take a look at the momentum here. It might actually cross down, right? Inflation has picked up. The FOMC will likely hike in September. That's going to be negative for gold. So just keep that in mind. If you're trading gold today, it never goes above 1930. You should be concerned. Okay. So if you have a long position on gold, I would say I was done pretty much. I get out about 1929. I'm pretty happy with it. Okay, so I'll take on any requests right now for me to look at, but I'll go through the chat very quickly, see if there's any questions so far. Why don't you trade US oil on CFD? I just don't. I trade US oil on futures. It's just the way it is. That's how I look at oil as an investment vehicle. I don't really speculate on oil. It's more seasonal, right? We've got your summer seasons. You've got your winter seasons for oil. So we look at seasonal changes for oil. Easiest money of my life. Look, I'll be honest, that was a pretty smooth trade, right? We got in, we got out, less than 1 minute, we're out. I was like, oh, okay, this is unlike the NFP last week, which was, huge headache. So what's the view about today's CPI? Will it make Fed pause, right? Pause? No, I don't think so. Look, it's special, okay? Because it's for the first time in, let's bring it up again. It is the first time in 12 months that we see inflation picked up, okay? So yeah, you can see that, right? Should I make it into a line chart so you guys can see it? So it's down and then it's starting to pick up, okay? So it might actually start to plateau a little bit, or it's just gonna go flat. But if you take a look at it, it's a significant turnaround. 3%, we got 3.2%. This is the first time in 12 months it bumped up, okay? Will it have an impact on September? Yes, to a certain degree. But remember with the September hike, before we get to September hike, there's one more inflation report, which is the August number, and one more NFP number. So it's going to play a part into it, right? But right now, I think the market is starting to price in that the FOMC will hike in September. So the movement for the next 1 month is likely that, okay? We expect the market to start pricing in that, yeah, the FOMC is serious. The FOMC still has an ammo for the interest rate, which is a 25 basis points hike, likely to go in September, and then they'll start doing their economic projections as well, and they'll release their economic projections, and we'll know what's in store for 2023. Is there going to be more interest rate hikes or not? Can I sell pound? I would wait. I would wait. Look, we can't. The reason why I wait until the last 10 minutes before the news gets released, because we need to find that, that range, right? If we go in too early, let's say if we start opening positions at the start of the webinar, it's not going to be helpful, because price might still go or they might still continue to push in one direction and whatnot. It hasn't come to a place where it'll just stay in range waiting for a breakout, and that's the reason why we actually wait. The closer it is, about 5 minutes to the news release, that's where we start setting our orders. How do I look at the current unemployment? Pretty less than expected, but still higher than previous. The NFP numbers, you mean, right? So the unemployment was down. I have no issues with the U.S. unemployment. The NFP numbers that we did last week, right? It was below consensus. The consensus was 200,000. Okay, we got 187. So the number that was released on Friday, that was July's number, and the previous number, which is June's number, that one was revised down from 209 to 185. So technically, from June to July, we actually see employment picked up in America. It's just that both the revision and the outcome is below the consensus for this month, which causes a little bit of confusion. But all I say is that the labor market is still good in the US. A petition to have more live news trading in the future. Look, Team Octa, they're always here to look out for any requests that you guys have. If you guys like this kind of format, yeah, we can do that. It's just that sometimes the timing is a little bit hard. What do the straddle people see when they quick trade CPI like this? Doesn't the data straight up good for US data? As the data make sure there will be hike on September? Look, I'm a data guy. You know me, right, fan? You know me. You've been following my webinars and whatnot. I trade the data significantly, okay? But what we're looking at here, we're not really scalping the market. We're looking at whatever initial volatility happens in the market, okay? Now, I give you an example. If you don't act fast in the first 50 minutes, you are going to be in trouble. In fact, this time around, you don't have 50 minutes. Let me go back into this, okay? The first 50 minutes give you that rejection. You know what's going on here? This is actually within minutes that you need to react to it, okay? You saw what happened? Within 1 minute, I closed my position pretty much at the top of 120, about 1929. If I didn't close that position, I would be in negative right now. We'll be looking at, we'll be bleeding right now. And that's the reason why this is different. We're not scalping, but at the same time, we're not really focusing on the fundamental side of things. We just want to get in, we just want to get out as soon as possible. Okay, so we need to have our limits as well. Okay, and that's why we were doing it like, okay, I think that's enough because it reached a certain level, we need to get out. Okay, but yeah, if you didn't close out, take it as a lesson. At the very least, you got your stop loss to break even, right? But if you didn't close out, you would be in negative right now, severely negative, right? Because we saw that reversal happen and whatnot on the pound USD, also on the Euro USD, right? Very, very sharp rejection there. Now, if you're thinking, okay, can I go short right now? I would wait. Okay, because you might get a better price. You see, it's not quite done yet. You might get a better price. You might get something closer to about 1.2780 as a potential. So maybe somewhere around here. All right, we're looking at past resistances, so we might actually get price to come back up a little bit higher. You might get a much better price to go in for a short. I don't chase trades, right? If we saw that sudden quick rejection, remember, people that showed it up there, like, if we got out just now and reverse our position, right now we would be getting out anyway. So it's just all noise at this point in time. I would wait until the hourly candle close, and then decide. There's no rush. Do not ever chase a trade. We were there waiting for a trade. I don't like going, chasing the trades. That's dangerous. Do I expect a stronger dollar index throughout the month? That's a very interesting question. Because I was conflicted, right? You probably saw my outlook on Monday. I was rather conflicted for the dollar index because technically it should be reversing on itself, but the NFP causes a little bit of confusion. The CPI right now, people are just going to be complaining that, oh yeah, it went up to 3.2%, but core inflation is down 0.1%, right? 4.7%. People are just going to complain. People are just going to whine. Is this going to transition? Is it going to be strong for the rest of the month for this one here? I think for the rest of the month, this is going to get stuck. It's likely to be stuck in a range for the rest of the month for the dollar index. I don't expect this one to just, oh wow, rally up to 103, 103.50. I don't think so. I think we're just going to be stuck a little bit, about 102, 102.50. It's just probably just going to fluctuate a little bit. If we're likely going to see this one pick up, I think we could likely see this pick up next week, not this week. Because if this one stays flat, right, and it goes sideways until it crosses the Ichimoku cloud, then yeah, that's when we're likely going to see it pick up. That would be on about 18th of August to 18th of August or 21st of August. Any gold entries right now? Probably not. We need to wait for the hourly to close. All right. We need to see how strong that rejection is from 1930. If there is that rejection, then yeah, you might be able to get a few entries on gold. I would still prefer to go short. That rejection was 78.6%. But yeah, if you want to go in for a short, then anything below 1925, that would be your entry. Your stop loss is going to be about 1930. Target is going to be about 1916, and you can potentially go a little bit lower towards 1914, 1913 if you want to, but I'll go with 1915. But yeah, just about there. The risk is, about $5. Aussie USD. Aussie USD again, very similar situation with the pound USD. We're looking for rejections. We just want to make sure the hourly closes, which is in the next 10 minutes, doesn't close above 0.66. If it doesn't close above 0.66, then yeah, you can go short on gold if you want to. It's a very sharp rejection anyway. It's a little bit too far to my liking, but yeah. Your stop loss is going to be about 33 pips. It's reasonable, right? In terms of target level, I'm actually going to go for a little bit lower towards 65 cents, which is okay. If you think about it, right? All that spikes and whatnot, it's okay. 33 pips. What's the big deal? Patient. Exactly. Just be patient. All right. Well, that was. I'll be honest with you. That was one of the easiest trades we've done in 4 months. It was like, oh, is that done? Okay, cool. Anyway, this is the code for to double your deposit bonus. It's non-farm 2023. It's valid until the end of the year, so no rush. You can use this until the end of the year, but yeah, every time you deposit, just make sure you use it. Otherwise, you're missing out on that double your deposit. It's non-farm 2023. You can use this code. It's still valid. So it just ignored the dates at the bottom there. Okay. But yeah, if you have any questions, any requests, let me know. I'll take a look at it. Pretty easy, right? We might actually have an early session today, but I don't know. We still have 9 minutes. I'm open to questions. Look, come on, guys. We just had like 160 just now watching. I only got 75 likes. Come on. There's 95 of you here right now. What's another 20? Just to, when am I ever gonna get 100 likes in a session? Okay. All right, guys. Any questions so far? I might have an early one. I don't know. This is surprising. It's good. Like, it's surprising in a good way, right? Nope. Look, this is the reason why we trade news releases, right? And the reason why, on my Telegram at least, I say to everyone, like, if you can clear out your position, clear it out. The reason is you don't want to go into this having a certain bias, right? If we don't have any bias and we're just going with whatever the news reaction is, we'll just trade it. We can get in, we can get out, no problem. We already discussed the euro, the Aussie, and New Zealand. If you want New Zealand, can you trade New Zealand? Probably not my best choice. I'll be honest with you. New Zealand USD. If we take a look at the New Zealand USD, in terms of positioning where the Fibonacci retracement is going, it is right. It's going to be a little bit tough because we're going to be looking at this one. That's not accurate because we have a spike to the downside. So it's probably going to fall into this bigger fibs, and it's still going to be there. If we take a look at it, it never surpassed 78.6, but it spiked above 100%. So I would actually be a little bit more cautious with New Zealand USD. Yep, no farm 2023 is still valid. Minutes after CPI, can we short it? I would go Euro, I would go Aussie, I would stay away from New Zealand. Yeah, I think from tonight, I would wait for a bit, right? If you're patient, I would give it another hour, and then you can start figuring out your position trade if you want to do your swing trades. I think post CPI, we have all that information. We're good to go. We can do a swing trade on this one here. But the overall tone for this one here, I think it's still going to be a stronger US dollar because the FOMC, the market has been pricing in that the FOMC is going to pause. I'm not one to price in the FOMC is going to pause. I'm the guy that says the FOMC is going to hike in September. But yeah, I have a little bit of a bias there. Another candle closure is enough to have a clear direction of the market. Minimum, right? Ideally, situation like this, because we saw that spike happen, we see that reversal that goes on in the market, and the market is just starting to pick up again. I would be on standby a little bit on this one, because right now, if we take a look at this one, for example, on the Euro USD and the Pound USD, right, that rejection is really quick. It's really sharp. I don't know if price is actually going to pick up a little bit. As I said, price might go back to this area, and if you can find that area to be, where you can sell it, then I think it's a much better area to short sell that. Okay, but I just want to make sure that it never crosses above 1.28. Regardless, if we take it, stop loss is not much. We're looking at about 30 pips of stop loss anyway. But yeah, feel free to decide on what you want to do, but yeah, the position is open and stop loss is pretty small. Risk reward ratio it's pretty good. I'm good. How are you? You're watching my webinars from beginning? Good. That's awesome. The XY is still sitting on 102. Yeah, it's likely going to sit at 102. How many percent does it affect the sterling yen in terms of US dollar? About 25%. I don't know. I'm just picking up a number, but no, it doesn't have that much of an impact. You can take a look at this one here. Sterling yen is flat. Nothing is going on. We have a little bit of a range there. You can actually do a range breakout if you want to on sterling yen. Euro yen is also the same thing. We're not seeing the market kind of rally at this point in time. It's pretty flat, right? You saw that movement in the dollar Japanese yen. You're not looking at that on the euro yen, sterling yen. All right. Cool. Anything else? Thank you. Done. All right. Let's wrap it up for tonight. Thanks for joining in. I'll see you again next month when we have our NFP. That would be on the 1st of September, I believe, where we're going to have our NFP. So yeah, I guess I'll see you next month. Good luck with the trade this month. But yeah, it's been a fun session today. Pretty good, start of the month anyway. A little bit of a headache on the NFP, but you guys want to watch what happened with the NFP. It just goes to show sometimes it's not as smooth as what it is as today. What is the win ratio of news trading strategy? I'll go with 1-to-1. I think that's about it. Sometimes you can go maybe 1-to-2, but logically we'll go with 1-to-1. Aussie USD stop loss anything above 66 cents would be good. All right, cool. Thank you all. Have a great week ahead. I guess this is already Thursday. Have a good weekend ahead. Good luck to your trades. And I'll see you as soon as I can, probably on Monday on the outlooks anyway. But we have our sessions for news trading, which is going to be on NFP, which is next month. All right. Thank you all. See you all.